Hi, Dudley. Hi, Natalie.
Hi, Ian.
Hi, good
Hello.
morning. How are you?
Good, thank you.
Awesome.
Yourself?
I'm well, thank you. I'm well. I'm well. The weather's the last 2 days have been pretty well, almost needed in a way. Quite dull and dreary. Um, but now it's picking up. So yeah, well, thank you. And yourself? How you doing?
Not too bad, thank you. Not too bad.
Good stuff.
Ian, today, sorry, I have to leave about 5 to 12. I've got a call with work at 12. Is that all right?
That's fine. That's okay. That's all right. I understand. Thank you. Thank you for telling me.
Push you back 5 hours.
That's fine. Yeah. It's not a big. It's. I don't know. I mean, it's not a big. It's not a big class today. I mean, I don't know. I guess I always use. I've noticed that we're able to get through some. I think. I think systems and control was. What was the systems and control? I don't know what set of slides we had. That was almost like 120 slides. I don't remember which one that was. But we got through that in the class time. Today's slides are 60.
All right.
I don't know how we measure that. That means so it won't be as long as I won't. It won't drag all the way through till. But yeah, no problem. That's fine. That's okay. That's all right. That's okay. Let me just get Graham in here. Graham. Hi, Graham. Good morning. Hi, how are you?
Yeah, not too bad. How are you doing?
I'm well, thank you. Good stuff. Awesome. Great stuff. Good stuff. Cool. Yeah, thank you. It was Graham who reminded me that you can. I mean, you can actually. I think I could have set it. I wasn't because when lockdown kicked off, we were all still getting used to how all these Zoom and Teams all worked. So I hadn't set. I set it for like I don't know whatever a certain number of classes, but you can actually set it for so many classes. So I just set it going. So this is a new setup which you guys were able to see via email. We'll go like this till we till we finish. Let me just take you to the main page. Where are we? Let's go to let me share my screen. We are yeah. So we are go to the table of contents in your text. Yeah, so table of contents, that's it. See what we have there. Table of contents. Action, would that be that one? Let me get James in. Let's see, that should yeah, right. I was looking for the first page that will come up here. It's taking counting to oh no, pick that up here. That'd be on here. Here. Okay, so that's not on here. Anyway, after today, we have 3 more chapters. After today, so that's we're doing well for time. So we probably what I will do. I mean, it's good. It's what I prefer anyway. What I think is good is that we will just carry on working and just use. Am I breaking up or am I in real time?
Seems to be okay.
Okay, perfect. Good. Thank you. Good stuff. So we'll just carry on and we will just use, if you like, the time. I mean, audit is one of those things that, as you guys have noticed, that you could spend a whole class, which I noticed, which we did when we have even the course in class, was that right. which I noticed was that, hi Jack, sorry, hi James,
Hello.
how are you? And I
Good,
suspect
how are you?
I'm well, thank you, and Hannah, hello.
Hello, sorry, I've joined with the wrong name.
I mean, I suspected it was going to be you anyway. But when you say you're joined with the wrong name, you're just using someone else's portal.
Yeah, I'm using my
Okay,
partner's
yeah,
computer. I've changed
that's
it
fine.
now.
That's fine. That's okay. We welcome new members anyway. It's okay. Anyone who wishes to study audit early in the morning on a Friday is free to join. Who knows how Zoom, how these things work. Cool. So what was I saying? I was saying that literally we're going to carry on, and then you can see it takes. We could almost spend a class doing a certain number of questions. So we're doing well for time. And it gives you a chance. And thankfully, all the courses, all the videos are recorded, so you can always go back, and it'll really give us time to break down and look at questions and really get good at it. So that would kind of structure it so that we're peaking in about early August. Yeah, that's right. So maybe peaking about early, yeah, second week in August we're peaking. So you're just kind of doing questions just to refresh yourself, because like all essay exams, you don't want to get too into it. When I say into it, you don't want to get too bored so that your energy levels go down. No, you don't want that. Cool, great stuff. So let's kick off. So today we're in chapter 9, internal audit. And let's just go there. I will just go and take my screen there to, I sent you the sorry, it's funny because last time I didn't send I get, and I mean I've got the PowerPoints, but somehow it just entirely skipped me to send you the PowerPoints for last week. But I've got them and I'll send them through to you. Okay, great. So let's kick off. So hopefully you can all see my PowerPoint, and hopefully you all have the PowerPoint as well. Internal audit. I think during the week, I think it was yesterday, I noticed Natalie had sent me an email, a message about, I think one of the questions you were looking at had some kind of question about internal audit. And what is good about audit in general is that this is more a knowledge area. So when I say a knowledge area, this is a kind of knowledge question. So you're not going to get a scenario to do with internal audit. No, you will get either maybe a 5 marker at the top, or a 5 marker or a 4 marker at the end of a scenario, with some asking you how could internal audit do better, or what could they have done. And you're not going to get like a 15 marker on the role of internal audit. No, that would be a waste of a good question. That would just be pointless, really. The examiner wouldn't be really testing audit, because this is really audit and assurance, which is really about external audits. So really, internal audit is very much more about the role that internal audit plays within the context of within the organization, and it's sort of how it assists or works with the external auditor. So we're not doing, although there's very much, they are very, I mean, for those of you who are in practice, James, I know, and in fact, what am I saying, Dudley, and anyone in the industry, internal audit is I mean, I guess we're accountants. No one ever came into accounting for the, not for the, I was going to say the word charity. It's a money making. It's a finance program. People make money from it, so why not? It's a lucrative career, internal audit, typically because of the experience people within industry have when they come into other organizations to work as internal auditors, or the experience external auditors have when they go into industries. And as we see as we go through this today, and the reason I highlighted what Natalie said was that I think internal audit is quite fair, in that if you think literally as broadly, and just quoting Natalie's words, crime, that's internal auditors are interested in everything to do with crime. So control activities, risk information systems, monitoring, and the control environment. So internal auditors are not just about the financial audit, or just about, I mean, you can see that finance is just one of those things, if you like. You talk about anything and everything within the organization, anywhere in the organization. So you can think about controls, systems. Internal auditors are a completely separate department on their own floor, and they go around testing, working within the organization. So you almost cannot go wrong when asked what are the functions of internal audit. You can literally choose from that sort of array of areas to go in, if you like, from systems to looking at fraud, or looking at individual projects, if you like, or looking at risk areas, or looking at debt, if you like, and the risk of default, or looking at employees and training, if you see what I mean, and looking at sticking to rules and regulations and sticking to all the other individual ISOs. So many organizations have to have certain tests, if you like, risk management tests and certifications. Are they expiring? What is the risk of us being sued? That's the beauty of internal audit. It's totally flowing. And now, I mean, there's a very popular field within audit referred to as IT audit, information technology audit. If you like, looking at the integrity of systems, how, if you like, reliable systems are within an organization, how well are they able to defend the organization from attack, if you like, from foreign parties, and are these systems doing what they do? Because we are moving into a more, as you know, online age. So there's more and more of this idea of IT audit, as opposed to, which is just pure looking at information systems as well. So you can really think broadly with internal audit, but like I say, it's not going to be a big 20 marker, but you will definitely see it in a 5 to 7 marker type kind of structure. So let's kick off. Again, a lot of it speaks for itself, but I'll try and again give you examples as I go along to kind of bring it alive a little. Okay, here we are. Okay, great. So what am I saying ultimately here? First of all, the internal control function. And that's the key thing here. We're talking about, we're still talking about systems and controls, but now we're talking about how does an organization manage its own systems and controls, if you like. And what you really want with an internal control function is you want a level of independence, if you like. Think of, again, giving you a big context. So as I'm going along, I will be repeating a lot of what I'm saying on the slides. There will be a slide where I've said a bit of what I was saying earlier, and I might skip it. But think of internal auditors as just external auditors working within the organization. So basically, if an organization could just bring in some external auditors, sit them in there just to make sure things are working, systems are working. Thank you. That's the term. Systems and the controls are working. Then we can be sure that the information being chucked out at the end is efficient and is good and is true and fair. So in effect, a management system overall is trying to make sure the controls are working, and that's what internal controls are really about. And if you want this system to be efficient, you want it to be independent, ultimately. So we talked earlier on about corporate governance, which takes us back to when we talk about control environment. You want your internal audit department or your internal controls department to have a direct line to your audit committee. You do not want your internal audit department answering to your FD. No. Because how does he criticize the process of their sales order process, or his lack of reconciling, reviewing reconciliations? What you want is a direct line between your internal audit team, if you like, deferring to an audit committee that is made up of independent non-executive directors, if you like, on the board. So that's the kind of relationship we're trying to strike here. Again, when I say objective assurance, again, they're able to look at different systems, if you like. So, we talk about an audit being an assurance engagement. It's just an assurance engagement where we give, if you like, positive assurance. Here, you have these independent, you're looking at assurance in different areas within the organization. So you're still giving a level of assurance. It's negative assurance. When I say negative, it's not about true or fair. There are no standards to apply it to, because, right, what gives an assurance, a positive assurance, where we say it's true and fair, is because we have a standard international financial reporting standards that we can benchmark what's going on within the organization and say, oh, this organization hasn't recognized its inventory at the law of cost and net realizable value, and therefore, if you like, it's not true and fair. But we can't say that. We can just, every organization will, I mean, from experience, again, just bringing experience, if you go into many organizations, they will have several ways, internal auditors will have several ways of working. They might have 1 to 5 being 1 working well to 5, this control isn't working at all. They might have risk heat maps, but typically they'll have medium, either low, medium, high. So, and then they'll have questionnaires. So they'll go in, test these systems and tick these boxes. So every organization, I mean, when we talk about every organization, I mean, where do you want to start? From the National Health Service all the way to an insurance company, all the way to a law firm, if you like, to a pub, if you like, to a school. So you can see that 100% they will have different roles and different ways of assessing. But ultimately, we want them to be independent. We want their assurance not to be skewed or affected by what other people are saying. We want them to be independent. And this idea of a consulting activity, typically you think that there might be a problem here. So another thing I want to associate very clearly is that if you get a question, which you can get a little 5 marker on fraud. Why not? It's just all language, isn't it? They want you to say things like, they want you to bring in words like there's an expectation gap between what people perceive external auditors to do, and that fraud is very much the responsibility of management. But when we say management, ultimately for management to truly find or ensure that they can prevent fraud, they must bring in their or create, not just create the impression, there must be an internal control function that will deter, if you like, fraud. It does deter fraud. Experience shows that if people know that there is someone might check randomly, so we can consult them and say, oh, there's a problem in this area, we need it assessed. Okay, great stuff. So again, a lot of this is very much just, a lot of this is just very much, what's the word, picking information from your text. But I'll expand on that. So really, ultimately, again, and again, like I say, audit is just about language. You know this already. It's just about how do you just kind of make sure you write this down, and make sure you represent that information, but you know it anyway. So whereas like adding value, here it says the key aim is to, yes, add value and improve an organization's operations. And it's very much a question of supporting corporate governance. Now, again, you can, like I said earlier on here, ultimately, every organization knows that they have to bring in, or they have to report to their shareholders that their accounts are true and fair. And what you're trying to do, in a way, is to kind of, again, if I'm repeating myself when I get to that slide, I'll simply skip it. What you want is, like I said earlier on, when we do systems and controls, if control risk is low, right, then the amount of substantive testing that the external auditors are going to do will be minimal, because they can trust the systems. Having an internal control, internal audit department is part of that kind of good, an element of having good controls in place. So if they're already doing a lot of work on the controls, if they're already looking at the controls, and if they are already doing their testing, then your external auditors will come in and they will do, if you like, even less work, if you like. So it's really important to sort of see the relationship there between the internal audit and your external auditors. Great. So, a question of supporting corporate governance, of course, because this is this element of the control environment. It's very much part of that backbone. And ultimately, yes, we're trying to make sure that we have, I mean, ultimately, management accountants or directors are stewards of those assets that they have been given, if you like. So they have to make sure that they have a system in place of managing that, if you like. Right. So yes, it's important to have these mechanisms in place, but we need to make sure that their effectiveness is evaluated, right? And that's really the work of, if you like, these internal auditors, monitoring, feedback. This is the role of internal audit. So yeah, I think if you can manage to write that and feed that back in a question as to what is the role of internal audit, your focus is very much on supporting not just corporate governance, creating a good corporate control environment, ensuring systems are effective and efficient, if you like, and that sort of thing. Again, yeah, so this is true. So having an internal audit department is, again, like I said, we must be fair. Organizations vary in size. What is definite is that if you are a company listing on any of the major stock markets, so whatever it is, whatever the FTSE or whether the New York Stock Exchange, you must have an internal audit department. It's kind of it's a requirement, if you like. And as you can imagine, this is all on the back of this comes out of the Sabin-Oxley regulation. I talked about a corporate governance on the back of the collapse of Lehman Brothers and WorldCom and a few other companies, where there just was not enough good corporate governance. And so you had these two American senators, Senator Sabrins and Senator Oxley, who put together these requirements and these proposals that that the financial director doesn't just sign off on the accounts that they are true and fair, but that you must have an internal audit department and they sign off that we have looked at the controls in place. And of course, if you remember when I talked a little about what happened to Lehman Brothers, it was the fact that it was very much about a control environment situation, not just about systems, not just the mechanics of systems. It's about the control environment, the separation of chairman from CEO. This is all part of the work of internal control, to make sure that you don't have an overpowering CEO who's kept in check. That's the part of internal audits as well, if you like, because they are present at these board meetings. They are present on whether or not voting takes place in the boardroom, and whether or not people can make their voices known. I mean, it's growing. And again, I keep saying, I think that audit has moved on. I don't think people necessarily say they go into audit because they're interested in the tick box or the numbers. I think it's the variety of the industry you might get a chance to work in. And it's actually working with people, especially as internal auditors, because you have a lot of whistleblowing going on. Think about it. If you really want to get whistleblowing sorted properly, if you can trust internal audit, all a whistleblower has to do is send an email to internal audit. Officially, they will carry out an investigation and they should find out what's going wrong. Typically, it's because maybe internal audit departments don't work very well. The whistleblower goes public. But again, like I say, it's not required by law. It'll depend on the size of the organization, and you have to sort of gauge it that way and work with that. And so typically, again, the complexity of your operations, the number of employees, and these are things where when I say audit is fair, you can kind of rationally think, yeah, you can have some element of the finance department carrying out. You can have finance directors, small organizations, ultimately, yes, carrying out these controls and these assessments of what's going on. Or you can have a little team of directors who do this. But I'm talking about small organizations. I mean, if we had a one-man running business, forget what I'm talking about. Because, of course, there's no legal need to have one unless you were a listed company. Then you would be thinking about this question of cost versus benefit, and whether or not what the control environment looks like. Very much all of this happening, setting the tone, this question of setting the tone from the top. If you have directors who have very good culture for respect and controls in place, then you can decide to what extent you want to have an internal audit function, how you vary it. Again, I mean, it's exposure, isn't it? You have many businesses, let's really think broadly about this, who trade across the world, who trade in a range of products, who are exposed to foreign exchange movements, who are carrying instruments of different sorts. So you really do need people who can understand the risk, if you like, to your business, and an assessment of that risk is necessary because you have investors who have plowed money in. So all this determines that's me at that extreme. Or you have a very safe business where you're doing simple government contracts where you get your regular money and you're supplying cups, something that you make. So it's all about the extent of risk and litigation. Kind of coming up to what's coming up here. In a large diversified organization, there is a risk, of course, that controls don't effectively because you're, if you like, you're having so many people, layers and layers and layers, right? So these functional organizations where you have several layers. But the key point, like I say earlier on, and I think these are the big things you'll take away from this, that internal audit technically report to the audit committee if the controls are not effective as they should be. So I think you should enjoy writing an internal audit question, exam question when you see one. Not a lot of marks because you can really think broadly and your answer will be very much correct. Right. So yeah, so the more complex the organization is, the greater the benefits obtained from having an internal audit function, as there is a greater risk of things, of course, going wrong. And when we talk about complex, you know what I mean? From whether we say complex from, this is why I say you should enjoy it, because you can say complex from a geographical point of view. You have branches in so many different areas, so you want someone to go around checking sure that all the organizations are doing what everyone should do. So for example, we had a function when I was training and this is something I'll come back to. We'll come back to it later on. Let's think about this. External audits firms can, an organization could choose to, if you like, hire, outsource, that's the word I'm looking for. You can choose to outsource its internal audit function. You don't have to have people working within your organization. And for all the same business reasons why outsourcing is good, is why you would. It's the same way why many businesses, I mean, Dudley works in payroll and in HR. So a lot of organizations, because you guys are specialists, your organizations are, you're in a specialist. There's every reason why they would outsource to Iris, because they just have, I mean, technicality, efficiency, software. And so you reduce the risk of anything going wrong when you outsource to specialists. So why not? And then typically your audit firms or something that's come out of audit firms will be your best internal auditors. And we used to do, the firm I trained with used to do some work for McDonald's. And McDonald's, so yes, I did work for McDonald's twice in a strange kind of way. So what you do have is that McDonald's run a franchise system. I'm sure you know that, where you is that although some McDonald's, I don't know till today, but at the time I was training, some McDonald's owned some restaurants and they had franchises. And what they had to do was to ensure that the franchises were acting, if you like, and observing the sort of controls they would want. And so from time to time, they would need people to go in and have a look and speak. And as part of preparing their accounts, so those franchises really had to follow a lot of rules. So sometimes, I mean, they were their own sole trader business, but they still had to abide by the same principles and practices, if you like, by the main overriding company. So we, as part of that team, and done a lot of audit work and internal audit work there. I mean, I was surprised. I mean, I trained, I've said it before, if you know Manchester, I trained in Manchester, and they, I mean, I was amazed. I was thinking, wow, I mean, this is something I'd be interested in. I mean, not really anymore. I don't know how they're doing, but their margins were amazing. Very, very, very good business. This was many years ago. I don't know if still that's the case. Also, to be fair, there's a lot of competition now in that space, isn't there, for food? Okay, great. So, but McDonald's still does well because of its work with kids, or its menu for that. So, like what I was saying here, again, you know, the poor controls, all you need is one piece of litigation, bad press for not following or not having if you like, certain things in place. So, for example, with schools, I did some work as well with academies, and at that time, what you would notice was that everything from number of students. I mean, it's as simple as that. If a nursery doesn't have the right number of nursery staff to the right number of students, that's what we're talking about. So internal audit work is very much about looking at anything that's a risk or potential risk to the organization, if you like, that can affect its business in the long term. Which is, you see, because we, the auditors, that's not our work. The external auditor, no. My work is to come in and to assert that the accounts are true and fair. And of course, anything that will stop me from being comfortable with you being a going concern, that you will continue to trade, where then I might need to consider these risks. But the internal auditors works in the business, for the business, and their business is about preventing risks. Of course, fraud. So typically where we have where we notice where we have scenarios where there's very little segregation of duty, you might want that area examined regularly just to make sure you don't have any teaming. The technical term, I might have used it before, is teaming and lading. I don't even know the origin of this. I mean, I know the teaming I can see from Teams, but when you have two people who are working together in cahoot to kind of defraud or get around the system and defraud an organization. So you can have internal auditors. I mean, or you can have outright fraud and then suddenly internal audit are investigating. So internal audit is a good one that way. Again, like I highlight again, it's very much about the benefits. Again, family-run businesses tend not to have this. It's just, again, observing, what you think is a good way. But these are measures to have in place if you're thinking about growing your business, if you like. So the directors may wish to have the comfort that there is an ongoing monitoring, yes, to help them discharge with their responsibilities. So like I said, the current control environment, what are the controls in place, and what systems have been left behind. This question of control environment, again, like I say, you can have very good directors who are very they set the right boundaries with their employees. They socialize, yet employees know to still follow procedure. Sometimes you have good directors leave, you have other directors who come in who are just not very good, who themselves don't sign off on things, who let things go. I mean, I even raise my hand. I mean, I'm an internal verifier at the college. When I say at the college, so even for AAT courses now, or so when they do them, I'll have to sign. And I mean, it's really a matter of trust. I don't know if Naomi taught you, Dudley, but she did some work. The truth is, I'm barely really going to spend a lot of time looking at it because I've known Naomi for a long time, and I'm just going to trust her. So I'm just going to look at it. I'll look at it, but I'm not going to just making a confession. We're going to spend hours. Yes, Naomi, sign off. So internal auditors look at all of these things. Literally. And even the series of, I'm just giving you as broadly as possible, even up to training. How regularly is training regarding GDPR, regarding security, regarding even to do with whatever it is, you name it, how we look after our staff, sick pay, make sure it's paid on time, whatever it is that could cause a risk, you think it, internal control functions are on it. Yeah. Okay, great. So there we are. So I said, please turn to page 280. It says 5 on your slides. I should have updated that. It's actually 289. So let's just look at something very quickly. Here, I'm just going to go back here to this let me just come back here. One second, I will just get this screen up. Here we are. Let me just come here, you share. Here we are. Cool, great stuff. So just looking very quickly, and again, I don't think you would, I actually think if this was thrown at you in the exam, even though you hadn't even studied it before, you probably make a good case of it. And it's similar, I would argue it's similar to the same arguments and the differences between management accounting and financial accounting. Not much difference there. but again, being technical, you want to talk about this question of well, scope, of opinion, of reporting. Yeah, I think those are the big ones, apart from these. But in terms of if an external audit, which is what this course is about, you always want to be using, I've already mentioned those words today. We're very clear on what we are. Again, this is a knowledge question. There's no reason why you cannot get a question, a little 3 marker on what are the differences between internal auditors very, very easily. Or maybe as the end of the scenario, some internal auditor is confused about his role or something, if you like. So again, this core is at the core of external audit, truth and fairness of the financial statements in a written report, as opposed to internal audit, which is very much looking at the efficiency and effectiveness of internal controls. And I think that's the language you want to be using, those kind of fancy words like efficiency and effectiveness, if you like, of internal controls. Ultimately, the internal auditor is reporting ultimately to the audit committee. So this idea of when I say an audit committee, that's me assuming an organization has an audit committee. Remember, an organization might not be that big. So really you're reporting to the board. Or of course, the technical term for that would be those charged with governance, if you like, and reporting to management. But these guys are reporting to shareholders. Now, it's rare that you will see what's going on with, and I'll show you a couple of samples of internal audit sort of forms. It's internal, entirely internal, it's not public. But this, of course, we expect it to be publicly available. We're very clear on our scope. We are looking at financial statements, income statements, statement of financial position, statement of changes in equity, the notes, the disclosures. Whereas with the scope of the internal auditor, like I said, you get sent to where you're going. You're looking at the entire organization, crime, in effect. So everything. What does the manager want us to look at? And of course, these last two are just, excuse me, these last two, appointment and removal, and it's just, again, by the shareholders of the company, but this is very much an internal thing by the directors, really. I think the directors ultimately, it's interesting because I'm not really, I mean, typically directors, because internal audit functions, depending on how this company started, right? So typically directors would employ them and they are employed by the directors. The directors actually will issue the post and bring them in. Of course, you might have someone on the audit committee interviewing, if you like, or you might have, I mean, I doubt, I wouldn't say the audit committee would employ them. No, I'd say the directors would, but then, you know, employing people now is a very independent, open process. It might be an internal promotion, because typically the best people for internal audit usually are people from within the organization, because they understand the current systems in place. They're the ones who have noticed what the problems are. Bringing in someone new entirely, you can imagine the teething issues. But it's, of course, possible, but it's just, so you have a lot of internal promotions going on here. Okay, and of course this is independent, but of course relationship with the company, definitely the internal auditors are very much employees. They work within the organization, unless of course we have done an outsource, if you like. But then that outsource still technically reports to they're employed, if you like, for that job. Now I'm saying it here. I probably will say it again. Under no circumstances is it possible that you, as if you have outsourced internal audit work, if you've received internal audit work, there's no way you can be the external auditor as well as being the internal auditor if this work has been outsourced to you to carry out some internal audit. You can't review your own work. That would be self-review, and ethically that would be a no-no. Cool, great. Okay, let's carry on. So yeah, so these are the areas that I was highlighting. These are the areas I was highlighting where we've talked about all of these, right? So again, like I say, now I'm going to run through these pretty quickly because, like I say, they're just kind of structuring and making very formal the expected activities, what we expect these guys to be doing ultimately. You know, and again, if you're looking for a mnemonic to hold it on, I would say crime. because it's very much, and let's look through. So we're assessing whether these people are demonstrating best practice in corporate governance, and that's really the E, the control environment. Evaluating the company's risk identification and management process, that's R. In effect, the effectiveness of internal controls as you control activities, if you like, that's C. The reliability of financial and operating information, that's I, your information systems. And of course, again, I mean, well, there are other things. You can keep going, which is why I think I said to Natalie yesterday, or when I think it was yesterday when I wrote the email, that you could almost just write and then have a good answer that's not even on the marking scheme, because these guys are doing everything from assessing projects. Was the project effective? Was it worth it? If you like, was it effective? Was it value for money? In effect, internal audit function folks can do that, if you like, assessing it and making recommendations. So their role isn't purely about looking at systems. The number of things, compliance with laws, these are all systems and laws and regulations. So many companies, like I say, have so many ISOs from everything. Think of construction. I never personally did any construction audits, but I come across a few students who have, and they tell me the number of ISOs are sort of industry related, if you like, tests that an organization has to pass, and if you like, they have to kind of stick to those regulations. So from health and safety of their workers, as you can imagine, making sure they have the right insurances in place, because again, as you can imagine, a construction site is not, you need to have, it's a dangerous place. In effect, people can lose their lives. Providing recommendations on the prevention of fraud. So those are technically the main ones, but if you think broadly, I'm sure you'll pick up most of these anyway. And again, sometimes, like, because this typically comes on the back of a scenario, because you get a scenario and then you'll have to discuss on the back of that scenario, you can pull out some of these from the actual scenario that you've read, depending on what the problems were there. So I've said earlier on about fraud, exactly, very much about trying to understand, investigate. So there's been a full-on fraud. Now it needs to be investigated. Your internal audit function is why that's there, to look at that. Again, a review of the computer environment. I was talking earlier about IT audit. Yeah, again, everything from customer service. So I was talking here about mystery shopper visits. This is true. Again, because again, I'll refer back to McDonald's. When I was working at McDonald's, we had the company itself had mystery shoppers who would come round 100%. And we kind of worked out, because you would see someone, the managers were very good. They only had so many mystery shoppers. So you would see someone, and as soon as they saw the person, they're like, oh, no, careful, he's a mystery shopper. And everyone would be on their toes, just to make sure, because they would know, they would see the guy come in, and then because he would come in and they would get a report like a week, and they from time to time start knowing, they'd pick, because he'd ask for certain things because he wanted to know. I think it's a bit sad how I still know these things. It takes 39 seconds to make, it took, I don't know what grills, they're probably using very high-tech grills. It takes exactly 39 seconds to make a hamburger, and it takes 117 seconds to make a quarter-pounder burger. They're quite thick. Things have changed, I'm sure. They have probably up-to-date technology. But he would sit there and you see him tasting to make sure the burger was at the right warmth and was just right, the right crunch. It was crazy, that was his job, to make sure. And he always liked ordering either the quarter pounder or the hamburger. Okay, great. Right. So there we are. So again, I talked about this idea of contracts. It's broad, isn't it? Many organizations are, when we come to do financial reporting, we will look at how we account for contracts, long-term contracts. Let's go back to construction. You are constructing a building for an organization. It might take 3 years. We must recognize some revenue on our financial statements. So do we recognize it based on the amount of time we have invested? So in terms of, if you like, the certificate of completion. So a surveyor will come along and tell us this thing is 10% complete or 40% complete, so now you can recognize 40% of the revenue that you would receive, because technically the client would only pay you when you finish the contract, and they might pay you in advance. And that whole financial reporting of that advance has to be true and fair. So if they advance you a certain amount, it's not yet, we can't recognize all of it as revenue, maybe just so deferred income, so debit, bank, credit, deferred income, then keep whatever, chipping off the deferred income and transferring to revenue. So in terms of the contract itself, typically if the contract will, if it looks as though we're overrunning on costs because we have a fixed contract of say £1 million, and we're now halfway through the contract and we're at £600,000 of costs. We've literally, technically we can't even recognize a profit of any type currently, but internal auditors are there to evaluate and understand why this is taking longer. Again, is it to do with, internal auditors do everything from, are we getting the right quality of material from the suppliers? Who set those contracts up? Was it fair? Can we change, if you like? They're there about measure. That's risk. There's a risk to this project that we will make a loss, and we don't want that. So again, just giving you different permutations. Now, this is true. This happens. An external auditor wants to come in and do as little work as possible. They want a scenario where controls are wonderfully working, and they want to go along and just test a few things to check for those assertions aka cover. So if you like, I just want to come in, and if someone has already looked at all the assets in place, and if they have a system of regularly verifying these assets every month for whatever reason, or making sure the fixed asset register is up to date for additions, for disposals, if you like, for whether we go with reducing balance or straight line or whatever other method you wish to go with, for recognition, if you like, in the right places as an intangible asset, as opposed to in the fixed asset register, as opposed to a current asset, as opposed to and de-recognizing assets when we no longer are using them. And internal auditors can do all of this, and you would expect an organization to want it done anyway, as opposed to for whatever reason. There's so many reasons. You could think of, oh, we need money. And if you remember from your days of raising finance, you want to look internally as well. So you could go look at your own profits, or you could sell off some old assets that you're no longer using, or you could defer paying. So the key point is cash flow means when you're looking for cash, you have a range of options internally before you go external, because their costs aren't there to going external. So external auditors can also, again, like I say, I think I might have talked about it earlier on in an earlier lecture, that external auditors can use the work of experts and internal auditors, because internal auditors are playing the role of experts on your control system. And you are still responsible for that, but you can rely on their work, and you must carry out your own test to understand how qualified they are, how long they've been doing it, no conflict of interest, they are truly independent, and they answer to the audit committee. And if you can verify that, then you can rely on the work, very much rely on the work of your internal audit staff. You can borrow them and get them to do it, to do the work. So, of course, again, what are we expecting? Nothing different, which is why I always think that the internal audit question is always an interesting one, because you could almost think broadly about it. Whatever you would expect of any well-functioning system, that you would expect them to be well paid, qualified, organized, independent, and unbiased, if you like, for an effective IA, so we can trust them, because all of this feeds into control risk. If we can trust this, if an organization has a good IA system in place, function in place, then control risk is low. Control risk is low. So where are we? So so appointed by the, again, the chief internal auditor is appointed by the audit committee to reduce management bias. So we're talking about really large, again, it's listed organizations here. Doesn't always work like this. But the other thing, yeah, like I was saying, is that when I said they have their own floor, they have their own room, is because typically many internal auditors or people who carry out these roles have come from finance and might still be carrying out roles within finance. But ultimately, what we want is that they are independent, fully independent of any roles within the organization, apart from this question of risk assessment, basically. I guess in effect, they are risk assessors. So we don't want them to have any operational activity. Again, I'm growing, I'm looking really in the realm of the listed company, the work plan agreed with the audit committee, and they should have full access to every part of the organization. This is something we would expect. There's something, I've noticed, I remember looking at did some work, some audit work with some local authorities. And something that happens regularly is that all directors or all kind of, what's the term in local authority, councillors, that's it, councillors in there, they have to submit their expenses, and their expenses have to be reviewed regularly to make sure that they are not claiming back funds that they have used for their own personal jolly. And this is part of that internal control on assessing, if you like, your ensuring you have good corporate governance, that you have leaders who are not misusing or abusing their power. So these are the things which is really, and I only highlight it here because it talks about no limit on the scope, even up to looking at the expense claims of the key directors must be open. Everything must be, all the benefits that any director is getting or claiming back from the company must, if you like, must be, the IAs must have access to that, so it can be questioned. Again, this is what leads to whistleblowing. This is what leads to whistleblowing. I was going to tell you a story about the head of Portsmouth College, Highbury College in Portsmouth, had to resign a year ago, 2 years ago, because basically you had a whistleblower who had, well, I have to say it's a whistleblower because I don't think they had very good internal audit processes, who was able to capture her spending at restaurants that she had been making. So she'd go, of course, take people out to restaurants and then send the receipts back to finance to pay or to claim back her expenses. And what she didn't know, what this person had been documenting these receipts for these years. And you had, oysters and caviar, almost like a book or like a film. And of course the college was cutting down on its funding in several areas, and then they had fallen into a sort of needing inspection or below satisfaction, or whatever you call those things, needing improvement, that's the fancy term. And of course, and then everything went to press. So the question here is that it's important to have access to these parts. So it's all these things happen. Ultimately, that's very much one of the key things that internal auditors are doing, not just looking at systems, but holding those accountable at the top. So again, whistleblowing. Again, like I said earlier on, this is important. Whistleblowers shouldn't. Of course, the only reason why we'll see most of what's going on is the whistleblowers don't just wake up and just stop talking. No, they must have tried to feed this information through to someone, and it's not been resolved usually. And so this is one way they can get around that. If you have a good internal audit department, then you're going to have it investigated fairly, at least, because they are independent. I talked earlier on about IA being maybe in smaller organizations. It may be managed as part of the finance function. And ultimately, this is the problem, of course. If you have an IA that's part of the finance function, if you like, this is some of the limitations. If you have an IA that's part of the finance function, then you can, you might be reluctant to say where the issues are, talk about the deficiencies. So the limitations are, if you're not truly independent, it really is a question of, can the organization afford the IA, the internal audit function, to be independent? That's really the case. And even with independence, really, it's very much about the powers at the top. If you like, you want strong non-executive directors of the audit committee who can challenge the financial director. The other issue, of course, is this question of familiarity. Like I said earlier on, it is typical for internal auditors to come out of the organization itself, to work within the organization, and then join the audit team. And this is the case, and this is most of the time, this is what I've noticed. I've noticed that you might hire a head of audit, internal audit, but typically the guys, the team, are typically have come from different departments. And there's a benefit to that, because they understand the systems, they know what systems are, and many organizations have different systems. I mean, especially the National Health Service. I mean, there's so many systems that you just need to get your head around before you talk about even trying to do the accounting or understand how you're going to carry out the audit, because the way they might have recharges to their revenue, and the money might come in first before they offer the service. You have all kinds of permutations. So you really want to understand what system you're working with, and it's all a matter of time, if you like, before you start trying to carry out any work. So having people who are already within the system is helpful. I mean, familiarity threat, of course. So if you have people who are friends and they have already worked in the organization for a while, it is easy to have people who just go into an area, they half-heartedly carry out the controls testing and come out. So again, I think ultimately one of the biggest safeguards is to ensure they are an entirely independent department, if you like, in the report, and it's clearly established for everyone to see, if you like, that these people are independent. They report to the audit committee, and you have that backing and support, as you would with any, if you were writing this even without knowing much in audit, you would that's what you would write, that you want them to be independent, fully independent, without fear of losing their jobs. And if you like, outsourcing, that's one way, I guess. You could hear a safeguard is just to outsource the intern, but that's expensive. And again, that depends on the size of your organization. So you can outsource it to a professional third party. And this kind of highlights this, what I was saying earlier on. In a way, it's like having external auditors within your organization. That might not be a bad thing, because at least they'll come in and do this professional job, which means that you will pay less money at final audit to whoever your auditors are, because your auditors will trust and rely on the work of your external of the fact that, like I said earlier on, evidence that is gained from third parties is your strongest and best source of evidence. And then followed by evidence that you have, if you like, gathered, and then followed by evidence that the client tells you, and where they make these written representations that this is the case. But if you can get third party approval or agreement, then you know that, yes, this is good evidence. So yeah, and having that outsourced is good third party evidence. I mean, we talked about this last week, if you remember. Maybe not last week, we did a question last week, the week before, when we were talking about system controls to do with outsourcing payroll. I think there was a question about outsourcing payroll. And we talked about having a level 1 or level 2 report where we still want to audit payroll, but and look at the controls in place. But because this organization has outsourced payroll, we would need to consult with the payroll company for either a level 1 or a level 2 report. And a level 1 report literally just says that their systems are okay and they have systems that are fine. But a level 2 report, which is a much more expensive report, will be coming from the auditors of the payroll department, really highlighting, almost giving you an audit of their controls. Because remember, we are controls testing, because we want to be able to rely on the controls of the payroll company to be sure that we can then say, yeah, we can trust their controls. Who have we gone to? Our fellow auditors who have said that their controls are good, giving very clear details of their controls, of when they were tested, So the good knowledge questions that will definitely carry you over the mark. You'll pass 100%. If you're telling the examiner, if you're remembering and telling the examiner, you're very much aware of level 1 and level 2 reports. When testing controls, you're there, you're fine. Okay, great. So some of the advantages of outsourcing the internal audit function. We've talked a lot again. I've said before that a lot of this applies naturally. Is this question of independence, 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 and the the trust in ethics that that our fellow professional firms are have an ethical code of conduct. They are specialists at doing these things. They're qualified, competent staff, broad range of expertise. Because of their experience, right, of going into different organizations and looking at different controls, they can make excellent recommendations. They are working for the company, if you like, and they are making recommendations as to what are better systems. I think that's always been one of my general problems with systems in general, just any systems in general. You know, I've always wondered and asked generally, not even just even for whatever it is, you know, like I've always thought, I mean, now we grow up in a yes, right, an information age. You literally, if you're looking for something or you're looking for how to do something, you can't start exploring online. There was a time when you just couldn't. So now there is probably something working that you're looking for, a better system, so you can refer to that and do it better and do it better. So yes, so professional firms, we expect them to be qualified, competent, broader range of expertise. They have worked from whatever chemical industries to national health, public services, spanning that. And again, like I say, everything you would expect that we talked about in payroll, specialist skills, and they can overcome a skills shortage. That, you know, if you're struggling. And again, they're not there, so technically you're just paying for this contract. Of course, when you have employees, you have to deal with, of course, right, everything you would expect. You have to deal with all the issues relating to permanent staff. But if you oops, sorry, oh, interesting there. All right, here we are. The risk of staff turnover is passed to the outsourcing firm. Professional firms are responsible for their activities. Yes, again, they are responsible for their own activities. They hold insurances, if you like. And the fact is that because, again, like all things to do with economies of scale, because they're doing this regularly, and because, if you remember from MA, the learning curve, because they're doing this often and they know exactly what's going on, and they're the ones that it'll be faster and cheaper, technically. Yes, and I talked earlier on about this idea of technology. These are things that, when I refer to payroll earlier on, they will have the best, fastest tools to carry these things out, most up-to-date tools to carry these things out. And again, the good thing about this is because they're able to specialize in this, they're able to get it for cheaper, and so you're having the best for less because you have an expert carrying it out, because the expert has been able to acquire this at a much cheaper. Initially, it probably would have been expensive, like all software, but over time, you will now have competition within the software industry, and so things get cheaper and cheaper and cheaper. So why not? Why not? As opposed to if it was just you doing it in-house, to acquire this and set this up might take forever. Yeah, and this is something you won't have time to do. Cool, great stuff. We'll do this advantages and I'll see what time it is and see how many slides we have left. So in terms of the disadvantages, of course, I mean, the problem with, like all things, again, it's the same problem with outsourcing. But I mean, again, it's just, again, whatever comes to your mind of what are the problems with outsourcing? I mean, like all problems with outsourcing, they never will ever, initially at least, or should I even say ever, understand or have an intimate knowledge of your organization. The worst thing about having of having people come in and out of your organization now and then, especially with audit generally, the one thing I know that people do not like with auditors is that one year this guy comes out, another year another guy comes out, and you have this problem where you have to be explaining how your systems work every single time to the auditor. And most people are expecting, listen, I told you that last time, you've documented everything. And fair enough, as much as you read something, if it's your first time on the job, you want to speak, you want to inquire and have an understanding, even though systems haven't changed. I mean, forget if systems have changed or tweaked a little. And like all human relationships, people just like, oh, we saw you last year. Oh, this is what happened last year. Oh, this has improved, blah, 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 blah. We have that. So, yeah, and the other thing with this question of with internal audit that I mentioned earlier on, if it's internal, you're at the behest or you're at the calling of management. And management can say, oh, listen, we think there's a problem there. They might have that problem on Monday. Go and do that on Wednesday. But once you have an outsourced function, you have to kind of wait for these guys to turn up, whatever it's once every 3 months or whatever it is. So there's some of the disadvantages that I'm sure you can pick up on. It's just not as active, it's almost reactive. And when it comes to internal audit, which is what I thought I would have personally thought internal audit was very much was about preventing, because internal audit isn't just about systems. They are looking, they must be, personally, my argument, but again, if you were weighing it, the argument is that you want internal audit to understand or to be able to sense the temperature, the culture of the organization. So the control environment is critical. This is something that you might have to pay a lot if they're external, if they're going to spend a lot of time or come along as often as possible to get that, to be there, to understand, right? It's difficult to understand if you're not feeling, if you're not experiencing the organization and how the organization works. Okay, great. Fees, of course, may be high. Yeah, I talked earlier about the ethical threat. So, sorry, I think I should have highlighted. It's really for listed firms, but I still think in an exam, what you show the examiner, and a lot of this, of course, is driven by listed firms. You don't want your EAs can't be your IAs, your external auditors can't be internal auditors for listed firms. For non-listed firms, they could be. But then, of course, you must have extreme safeguards in place to ensure the two teams are not are never going to have the same people ever on the same teams. Again, why take that risk? It probably is better. It looks better outside for people to know you have completely very internal auditors for external auditors. Yeah, then the usual problems of renewing contracts, but nothing unique to audit. This is the thing, which is why I'm going through it like this. Just any service that you have outsourced, if you like, you don't have much power over that. Okay, great stuff. So yeah, I think this is yeah, like I say, let's see how many slides we're on. Oh, we're on 40. That's not too bad. That's not too bad. So what we can do is, yeah, why not? Let's take this isn't going to be a big one today, so don't worry. That's and the weather's looking slightly up. So these are one of the nice things on courses that are slightly. I mean, it's all very weird, right? Technically, you'd be taking your exams this week, and if everything had gone to normal, but who knows what that would have been? Different world. That didn't happen. So yeah, let's take it's 10 technically I'll say it's 10:40. Let's take a 15-minute breather. Let's come back at 5 minutes to 11, and then finish off the rest of the slides. Cool.
Thanks, Owen.
Yes.
Oh, thanks, Owen. Sorry.
No worries. Yes. Sorry. Yeah. Great stuff. See you. Okay, right. Let's carry on. I think first of all, what I wanted to highlight is that what we see here are more your typical assignments by internal auditors. But like I said earlier on, the scope is in fact, think of even up to the point where you could argue that an organization is I know we don't do we will do when I'm trying to think if we do it at F5, no, but you might have come across something called, just really being not random here, something called the Ansoff matrix, or this is the other ones. We will do it when you come to your professional stage, when we look at your professional case study. But you might have done it at business studies, or so basically you have an organization that's been in a market for a long time, and so that's the home market, if you like, and so they've been there for a long time and they're thinking about expanding really, so they might choose to stay in that home market and try and, depending on the amount of competition in that home market, with that one product, they might choose to stay there and try and penetrate more markets, or try and cut prices to gain more market share. But again, the question is that product now, has everyone seen the product? Is there a saturation? Or they might go on with some new products. They might go with new products in the same market. And all of this, when someone wonders who is doing all of this work, you can have the folks in internal audit doing this work. So they're not just, I don't want to think of internal auditors as just these tick box guys and girls who just, they're analysts to a certain extent. I would almost go as far as calling them, if you like, analysts, because in effect I'll call them risk analysts. Because their job is to ensure the organization doesn't crash, and that was very much, again, the nature of management accounting was very much a cost accounting model, where that's what management accountants were there to control costs, to manage costs. But then people started looking to management accountants because they had all this information, if you like, to tell us what's going on in the future, as we can ask risk, to start asking us, what should we be doing? Let's think about the future. So like I say, we can have new products, same market, or we have same product, new markets. So we might be going abroad, if you like, or then you have entirely new products, new markets. So this matrix is a very popular benchmark for you deciding, of course, where am I going to go? And then you would, of course, then look at each area and look at the risks and look at the issues, and all of that information is can be put together by your internal audit department. So here we talk about your classic ones, and we talk here about value for money assignments. Now, even the idea of value for money, you might have come across that. And this is something when we come to do, I'll say this now, because you can see, I know I'm sort of talking ahead of time, but you can see now, to a certain extent, I mentioned earlier on, that it's possible that you can almost read ahead. You can almost read ahead of me in audit and get the other chapters done, but come to us and have me go through the examples. And you could be studying for even another PM if you wanted to take that again, or tax or whatever. But one thing I was definitely going to highlight this time as I go forward, and I as a tutor teaching performance management, the problem with performance management is that there's so many numbers. You spend so long discussing the numbers that you forget that they're sorry about that. That we spend a lot of time not looking at that whole written bit. Talking to Abby, she highlighted that they ask these very general questions on, like, the National Health Service and how how money has been used efficiently and effectively. So almost like you'd be wondering, well, what about all those numbers I learned? So a lot of this value for money is happening at is the way now we assess. Is the way we assess public health departments, especially as they don't have a profit structure. They have a very income and non-expenditure kind of money coming in, money going out type budget money coming in from the government. How have you spent it, if you like? So they don't sell per se. That's not the main ethos. And apart from that, the main ethos is that are the people coming to your hospital getting better, or how do we measure how well they are, and how do we know the money we've given you as a hospital or as you as a health a government, a council, or if you like, how do we know you're utilizing this money well in schools? How many students are coming out with above a certain benchmark of grades? And so you have a different type of assignment that has absolutely nothing to do with your profit-making organizations, and that's where we talk about this value for money, typically money coming in from the government, if you like. And so you're now set a budget. So you will go into many of these organizations, and many of them are budget holders, and they're managing that money, and they have to defend a renewal of that funding for next year as to how well they've spent that. And then, of course, your classic operational audits, which is what we typically tend to associate internal auditors with. And we'll see some examples of that right from as we go through the examples in a second. But literally, what are the systems in place? So whatever the operations are, sales, purchases, could the systems be better? Could the systems be more efficient? Sorry for the noise in the background. Could the systems be better? Could the systems be more efficient? Because efficiency saves money. And ultimately, we are trying to be as lean as possible, and if you like, for lack of a better word, automate systems to be as efficient as possible. Yet, which is why we now have the rise of IT audit, because of this need to this move towards automation, which is efficiency in effect. So, which then means that what we now need to do is to check the systems are working efficiently, and not that when someone goes to the bank and presses £10, the bank gives them £1,000, that sort of thing. And those are the controls, because these are all programs, aren't they? Programs that are written. So we need to make sure that we need to test, which is why you have, I mean, in fact, there's a whole industry, isn't there? Software testing. So you can get a job as a software tester and work within an organization. That's all very much part of internal controls. Before whether we let even whilst the system has been switched on for everyone to use, or whether or not the system is still being worked on. Either way, you still have people testing the system all the time. And then, of course, we have financial audit, which is what we as external auditors would go in and do. But fundamentally, like I said, internal auditors can do a lot of work for us, because if they can work on those controls, then we can depend on the controls and say control risk is low. Therefore, because the risk of misstatement, if you remember, I'll keep deferring from time to time, risk of misstatement is due to inherent risk and control risk. Detection risk is our ability, or inability, should I say, as well as auditors, to pick up on those risks, which may be due to a sampling risk or a non-sampling risk. So sampling risk, we've actually gone out there, and unfortunately for us, we've picked, I don't know, there's 10 items, there's 6 of them bad, 4 are good, and we've picked the 4 that are good, and we've therefore thought, yeah, we've picked 4, and that's the representation of the sample, as opposed to this is just, you're just not good enough, you're not done the work properly. So just breaking those down very quickly, value for money is concerned with obtaining the best possible combination of services for the least resource. And this is a review. So this idea of economy, efficiency, and effectiveness will come up in performance management now. We tend to see that for one of the questions. Although we used to think that this was minor, but it's big now. When I say big, it's coming up regularly. They want you to write about it, and just writing, whatever you would ordinarily write. As you can see there, they're saying that well, all economy is it's almost like input. I would say this is really about input, if you like. How can I get, cheapest is not the right word. it's about getting the best quality of resource for a minimum cost. There's a balance here, isn't there? A balance. So minimum is not cheapest, because you probably won't get the best of the cheapest, but yeah, better than cheap, more expensive than cheap, but very good quality. So I want to see if I can somehow get lucky and get great quality at minimal cost. This is what you're trying to ultimately do. And that's all a matter of judgment, isn't it? And then you probably, and again, with all these things that are subjective, they have these things in statistics called, or when you do these surveys, they have these things they're called Likert scales. So all organizations will decide how they measure over one. It's like trying to measure customer satisfaction over 10. I mean, what does that even mean? So people will say things like, just go from agree to disagree, and you'll have different, you almost have to go with that. It's not a perfect science, in effect, but we are trying to measure it to see how efficient or effective or how well you've done with economy, and then grade you. And of course, efficiency is very much how much output can we extract. Basically, what's the return? Efficiencies, if you like, what's the output with the minimal use of resources. So it's very much about what's the return on this, on your input. Ultimately, what's the return? And trying to see if we can get more out of what we have, if you like, which in a way is a bit sad. I mean, when I say a bit sad, I think that's what we've been, this very mathematical way of looking at, that's right, that's the term I wanted to use, this very mathematical way of looking at services, especially in value for money areas, classic the National Health Service or in schools, causes a strain, doesn't it, on these departments. And then it's easier to say we're looking at it from a mathematical point of view, but the more we spend time looking at it from this point of view, we spend less time looking at effectiveness, or how well we've, or what really is achievement, if you like, you know, because if we could spend more and a class could get an A, we might have set achievement down to just C's. In fact, what am I saying? In England, for us, you know, success is a E. E is success. E is success. And you and I know it's harder and harder to get very much, to go very far with ease at GCSEs and A-level. I'm not saying it's impossible, of course, but it's harder. So maybe if we change success to something else, then we'll be forced to put in more resource, and then that raises an economic issue. So it's one of these tricky points, isn't it? So so basically, you now have, so internal auditors go in there and then, you know, do their work and measure how, if you like, how this organization is done in terms of economy, efficiency, and effectiveness. And effectiveness is always smart, how many students actually succeeded, or how many patients were released within a period of time, or how many people survived a certain operation, if you like. What is your rate of success, if you like. Ultimately, we're trying to measure success, and we need different benchmarks for measuring success. So this is just an example, and I'm literally using the same ones you guys have in your text. But what I was saying earlier on is not always about, it shouldn't be about cheap, because you get into trouble generally, isn't it? I mean, you can see my hair is all over the place. I mean, that's what happens in a lockdown. So I thought to myself, I'll buy a set of hair clippers. And I was on Amazon, and I don't know how, I just kind of, I saw a pair of clippers, and I just sort of liked them, and I don't know how, maybe because I was doing it early in the morning and it clicked. And for some reason I was thinking, why haven't they come? Because I clicked Amazon Prime. I thought I did anyway, but I didn't. And I think that's taken like, just arrived in like 3 or 4 weeks, because I think they come from China. So my point is, and they weren't expensive, but £18 or something. But I don't know. So the key point here is that cheap isn't always, you have to consider whether or not, I mean, look at this as a lead time. Yes, it's cheap, but, and we could take this picture and we can take this example and we can apply it literally to any service. It doesn't matter. You want to get a cheap doctor, it'll take ages for it to get them to actually get the patient all right. So it's you know what I'm saying. So that's what we're, sorry about that, it's a car going, I don't know. So if a company needs a supplier that can deliver at a short notice on a regular basis, this will not be effective. So the question is, how much do we value our patients or clients is the question. You know, you could talk about schools and supply teachers, that sort of thing. It's really the same. So yeah, so here it says if a company sources lower quality material at a price of 10% cheaper, but uses 50% more, and then, well, this is not efficient. So ultimately, it's very much about how much are we getting out of this? What is the return, if you like? And again, I said it very earlier on, an operational audit is very much a systematic review of the operations within the organization. We're trying to be more and more streamlined. There's no word, I mean, you and I know that we're seeing this even in our industry. We have now, Chichester College has changed it. I might have mentioned it earlier on. We used to teach Sage. We don't teach Sage anymore. It's just Zero now is what we teach. And Zero have joined us to certify the students as soon as they finish. So students are now Zero. You almost have to be Zero, QuickBooks, I think cash flow. Many organizations are having a number of certifications just because all of this is all connected now to HMRC. It's all efficient, minimal bank rec, although you reminded me that, well, not quite. There is still some bank wrecking going. So this just highlights that point, that the fact that you have these junctions in a system, if you like, from order, if you like, manual entry of order to dispatch to invoice, is the, oops, sorry, let me just get this, I'm sorry, let me just, sorry, here we are. Oops, I'm trying to get rid of this. Here we are. Okay, there we are. Let's get there again. Yeah, so trying to get rid of those junctions in the system is what we're ultimately trying to do. Well, yes, which what an organization is trying to do. And you and I know that literally as soon as an order is placed, so what we now have is a matter of just IT verification. As soon as an order is placed in many organizations now, manufacturing, for example, it literally will produce with the same code or the same electronic tag or whatever, the same invoice number from order to invoice number. It might be S5, S005, all the way to INV005. So the tracking is kept. We have numbers literally are sequential. We can never lose an invoice. We can never lose because it has to go through a system. And these are all the problems we had with completion of systems. And what you now need is someone to really go in and tick and say, yes, you know, this can now happen. And then that's how you have that or IT authorization happening. Cool. So, and then you can see here all these problems. So you have the risk of errors. But so really from order, that's when you have things set in stone with the new systems. But when you have these blocks, then you might have errors in translating from one system to another. First of all, again, I must say that we're really talking about integrated systems, of course. When I talked earlier on about SAP and Oracle, so typically we want systems to speak to each other. And typically an order system, right, is very, once upon a time anyway, was not connected to a finance system. You know, order systems were not connected to order systems. Stroke, when the client orders it, was not connected to the warehouse, was not connected to the finance ledgers. Now nothing's connected. So, excuse me. Now the whole thing's connected. So that, in effect, you can see no manual entry will be required after the order has been entered in the first instance. So it's very much about verifying things online. Right. So that kind of that's the example with operational audits. And like I said earlier on, if we can rely as external auditors on the work of our friends, the internal auditors, then we will be doing less work at actual audit. If we can rely on the fact that the internal controls are effective in reducing the risk of that. And again, like I say, because these are all the things that we are. Yes, we're interested in verifying the figures of the financial statements, but ultimately we are also assessing whether this organization is a going concern. And the fact that they have their risk, they have good risk management. So classic scenario, a popular one that might be, that's pretty obvious with concern, which you can see in questions, is that their debt is due at the end of the year. That's you're auditing for the end of the year. And when I say the debt is due, whatever 5 years they're bored and they have to repay the whole thing. And if internal audits are regularly looking at ratios and looking at gearing and are discussing with management on ways of renewing, if you like, renewing the loans, or are in talks with new lenders, or it could be the loss of a major contractor, the loss of a major customer, and internal audit are very much aware of this, or how this is affecting revenue, and what steps are being taken to discuss with new customers. All this work has already been done for you. So they have their risk management in place. So yes, they are a going concern. It's not about, unless you don't trust the work of internal audit. It's the fact, going concern is very much about the fact that there is a plan in place to continue trading. It's not about whether or not you're making a loss, because we know many organizations can carry on trading whilst making a loss. So again, because IA will be consider so many things, like I've just talked about, from value for money from the IT systems, procurement for the IT systems was effective. All procurement. In fact, I know almost for a fact that all procurement is regularly reviewed by the internal audit department, because they need to understand procurement is big, especially in the public sector, right? I mean, the person who has the power to accept a purchase order, you have just made money. You have just made money for the supplier. So the question here is, why did you choose that supplier? Was there a kickback? Are they friends? Are you a director in that company? Is your sister a director in that company? Is your brother there? Is your wife the manager of that company? So all procurement processes are typically reviewed by this. I talked earlier on about project auditing, the value for money for even implementing new systems within the organization. These are all there. So in terms of us using them, of course, and again, right, there you are. So ensuring the accounts are true and fair, but then looking at the finance, and then we coming in to verify that. That's also very good. So financial statements, of course, and then looking at the monthly accounts, ratios, forecasts, projections. You know, they're almost testing those documents to make sure that those are reasonable, because these are the sorts of things we come in and look at for going concern. You see, your forecast, your projections, so they're reasonable. Yeah. So this is So this question of reliability and efficient and timely manner. Inefficiently, in effect, if you don't have that, then you now have people making decisions on information that's not reliable. So there you are. Yes, so here we are. Yes, I talked about this earlier on. I mentioned, if you remember at the beginning of the class, I was highlighting the fact that because organizations are, and when we come to financial reporting, many organizations hold all kinds of financial assets on their balance sheets, on the statement of financial position. But they can just be holding currency as a current asset, as a financial asset, because it's an asset. They might be holding, they bought certain financial instruments with the right to, or they might have they might be holding shares of companies as an asset. Why not? Because typically, just the same way you would hold property, you can hold shares, and those shares might be volatile and changing in value. Say if a share is because they are. So, or they might even be holding, if you like, loans. So they might have lent money out or holding, if you like, yeah, they are the owner of these loans. So they might have lent money, and so they're holding these loans. And of course, depending on whether or not they've lent them at variables versus fixed, interest rate fluctuations, you know, could work against them. Um, I guess right now that's not such a bad thing for people who hold. Say if you have borrowed money and interest rates at a variable rate and interest rates are falling, that's great for you. If the if the if the if the if the bank or the person you're lending has also dropped the interest rates, which they should, but again that's a different topic. So looking at inflation and things like that. So these are things. So in both cases, in all these cases, internal audit will be on the processes and controls that underpin this. You know, so the question here is if we'll come to, when we come to financial reporting, we'll come to talk about this idea of which is the English word, the real meaning in the word in English, hedging, if you like. So if you're holding on to something that has the potential to fall in value, you might buy another instrument to stop it from falling in value. But the key is, what are you doing to avert the risks? So hedging pretty much looks for ways to avert or prevent, if you like, prevent risks, if you like. Think about it this way. Imagine you take out a loan right now. Imagine you take, for, let's just pretend you take out a loan for £10 million and the current $10 million. That's it. And let's just pretend the exchange rate was 1 for 1. So £1, you need a pound, and you'll get, if you like, a dollar. Then imagine the interest rate is going against you, and suddenly you trade in pounds. Imagine now that £1 would only get you, if you like, 50 cents. So now you need pounds to get a dollar. So once upon a time you had borrowed a 10, you're going to have to find 20 million pounds to pay this loan back at the end of the year. So the interest rate is going against you. You have to start thinking, oh my goodness, what's going on? You have no power over these interest rates. They happen external to you. So you then either have to invest some money right now, so that, or you should have been thinking about this so that you can then offset this loan, so that you have something that would have gone up in value by that time. You just need to be thinking about how you're going to deal with this, or you need to, you can buy certain instruments that can protect you from this. And that's what all hedging is. And that's what internal auditors, part of their work, will be trying to do to manage the risk, if you like, in the organization. As far as even going into managing the risk of many organizations, I mean, like risk management, we might not think of it as risk management, but you have to give a certain level of notice to your employers before you leave. That's a risk technique. Because if you could just leave whenever you want to, then you're putting them in trouble. So they have to be aware of that, they test that, and they need to see what the organization do about bringing in new people. We're just talking about resources here, right? Physical, financial, technical resources, information resources. You could go in so many directions with it. So typically an audit report, an audit report is specific. The scope has been designed by management or the audit committee, very clear on what it is. Typically, again, you can see we talked about value for money, we talked about operational, we talked about financial, lots of things that you could be asked to do, but it will depend where the risk is and who we have around. Typically, an organization might look at all this anyway. So I imagine operational, I'm sure operational would happen anyway throughout the whole year, the timetable. There might be new systems in place that we want to test. Like I talked about, expenses of counselors, things like that. All these things have to be done. But of course, they're not all done at once. It's just, we just write it, dig up a new report and do work and do what we, or if there's fraud, whatever it is. So anyway, key point is that a typical report will be, what are the requirements of the assignment? So the risks that are being described and recommendations in that particular area, what work has been performed, and again, all very unique to the job. It is rare that any two organizations would have similar, because NHS versus insurance versus schools. And then you would have, so you classic report, if you like, your terms of reference, executive summary, body of the report, and an appendix. I picked up these two online just to show you. Again, like I said here, you have really, again, the period of time the internal audit is conducted, who it was conducted by, what exactly were you actually looking at, and just a discussion of the problems. I imagine most organizations have, they do have some standard worksheets and what they consider to be risk factors, whether they go 1, 2, 3, 4, 5, or low, medium, high, and we'll make their recommendations. You're ultimately making recommendations as to, if you like, what the problems are. Even little things from how long it's taking to call, to get through an organization when you call them. All these are risk factors that can affect, if you like, how our clients feel, and therefore, or how long it takes to resolve a matter. If you like, really, it's unique to the scenario. And here's another one. You have here the audit information, the process being audited, who demanded this, who is the auditor. Then you can see here, you have what it is looking for, describing actual performance to date, evidence of plans to achieve the improvement goals. So you can see that internal audit is always goals, some information on you probably have a backing document to just for the fuller points and feedback, for example, here. And they have some other things, but here they have some numbers here. 1 is poor, 5 is excellent, and you are writing on what you believe the evidence of effectiveness is. But this is, well, of course, we backed up by evidence, if you like. But it's just looking at the process from literally sales order all the way to receiving the money in the bank, to review work, if you like, to even just looking at gearing ratios, or even looking at training, if you like. Really, you decide, you think crime, and everything is up to segregation of duties within a particular department, if you like. Cool. Right, great stuff. So that brings us to, like I said, there wasn't a big one. That brings us to the end of that. I think what you can do is that, yes, well, I think for this one, because it's a knowledge one, I would recommend that you just do the TYUs in this chapter, the test your understanding ones, and keep working on those, just generally working on that, on those questions 164s downwards, please. 1, 2 a week is good. They take about, I think, maybe 2 hours to do, backed if you write it out properly. I'm sure on YouTube I'll look at the questions, but I think I have many of these questions already done. I will look, but still ping them over. But you can always do it and review it. And then I think definitely by the time I do audit, what I want to do is I want to finish audit procedures, which I will start next week. And by the time I do that, then you will have more vocabulary for answering these questions in general, and also deciding the extent to which you'll make recommendations for audit risks as opposed to carrying out audit procedures. So you can, in your when you're looking at audit risks, when you get recommendations, you could write a few procedures, just a bit, but there are questions that are very clear. What are the audit procedures for testing bank, something along those lines, as opposed to what are the risks and what are your recommendations? You might throw in a procedure or something along in there. But by the time we cover procedures, then I think you're ready to kind of do everything pre-reporting, so to speak, final reporting through the audit report, whether the accounts are true and fair and things like that. Cool, great stuff. So do the TYUs at some point later today, and enjoy your weekend.
And you.
Thank you, Graham.
Yeah, thank you. Thanks,
Awesome.
Owen.
Great
Yeah,
stuff.
thanks,
Thank
Owen.
you.
No worries, guys. Awesome. Have a
Thanks,
good
Owen.
nice one. See you later. Take care.
Cheers, bye.
Bye.
See you later.
Bye bye.